If you're looking to get into real estate, you really have to understand what loans are about. In today's episode of the Signet podcast, this portion talks about different loans offered by loan people based in Austin, Texas. Max has been doing loans for about 20 years now, and he goes in depth about explaining the different types of products that are offered by his company. If you want to do real estate, it's really helpful to understand the different types of programs that are offered around the country. So immerse yourself in the world of loans, and if you have any comments or questions, feel free to put it below.
We're all residential, 1 to 4 units.
Okay.
We've got some kind of in our back pocket, some commercial stuff, but our primary focus is 1 to 4 unit properties. Conventional, FHA, VA, USDA, jumbo, all the normal stuff. But then a lot of what's called non-QM. So DSCR, which is debt service coverage ratio, which is you can buy a rental property and not qualify with any income. If the property cash flows a certain percentage at or above the monthly payment, you qualify there. And obviously there's some other stipulations that go with that.
Right.
But again, the borrower's income doesn't even come into play.
So that's like an asset-based lending where it's based on the actual property.
So we also have those too.
Oh, that's not?
No, that's not. So that's DSCR, debt service coverage ratio, is basically qualifying. You know, if your payment's $2,000 a month, what is the potential rent of that property?
Right. Okay.
Is it $2,000? Is it $2,500? You know,
Right.
there's formulas there that we look at.
Okay.
But there's also asset depletion, where we can turn your assets into income. We have bank statement programs as well, where self-employed. We all know people that are self-employed write off everything they can, and the tax returns don't necessarily look like is not a fair representation of what their actual income is. So we have programs for that. We've got some options as well to even be able to close residential loans under an LLC, which a lot of people can't do. Generally, you think LLC, you have to go get a commercial loan. And commercial loans are higher rates, shorter terms, that kind of thing. We've got an option for that. We can go up to 20 finance properties versus the Fannie Freddie regulation of 10. And then even a lot of jumbo lenders are limited to 4 finance properties. So
what's that? What do you mean by that?
So a lot of lenders have a cap on how many financed properties you can have when you come to get a loan.
I see.
So Fannie
for the
and Freddie,
individual,
so if you're an investor and you're buying an investment property that's a conforming loan, and it'll be your 11th financed property, you don't qualify for a Fannie Freddie.
Right.
So you've got to go some other route.
Right.
So we've got a lot of different programs for people to qualify outside the normal, just here's your bank statements, here's your pay stubs, here's your tax returns and W-2s, and go.
All right, guys, I hope you enjoyed that video. I love making these. These are really great. And please leave a like and a subscribe because it really helps the algorithm, and I'm trying to grow the channel.